Petty cash funds. What is a petty cash fund? A petty cash fund is an amount of cash kept on hand to pay for minor expenditures. The size and scope of a petty cash fund will vary across companies. They can be used for postage and the purchase of small office supplies. Firstly, the petty cash fund needs to be established. Suppose that on the 1st of May, Smith Design Group establishes a petty cash fund of $100. This means that petty cash would be debited and cash would be credited. Ultimately, there is no change in total assets, as the entry increases petty cash and decreases cash of the same amount. The person in charge of the cash, let's say Lily, acts as the custodian and can give out cash from the fund to make payments or reimburse employees for payments that have already been made. Receipts must be collected for all uses of the cash, but no journal entries are required. They are only recorded when the fund is replenished. As the cash in the fund decreases, the fund must be replenished. The remaining cash is counted and the company cashes a cheque for the amount that brings the total back to the original balance. The receipts in the fund are then used as documentation for recording expenses. At the end of the period, in this case the 31st of May, it shows receipts totaling $85. As a result, Smith would need to cash a cheque for $85 to replenish the fund. The expenses would need to be debited whilst the cash needs to be credited. The entry increases the three expense accounts related to expenditures and decreases cash. Because Smith is recording expenses resulting from the fund use, the entry reduces both assets and equity. When the amount of cash needed for replenishment does not equal the total amount of receipts, the difference is charged to an account called cash over and short. This can occur if not all receipts are obtained or incorrect change is given. For example, Lily only counts $13 of cash in the fund before replenishment. In this case, $87 is needed to fully replenish the fund. However, there are only $85 of receipts. The $2 difference is charged to the cash over and short account as follows. In this entry, the cash over and short account is debited, which indicates an increase to expenses. Once again, the assets and equity are both decreased. Once the cash over and short account is debited, the petty cash fund will then be restored to its original balance and ready for the next period.
Created using Powtoon.